Welcome to the Real Estate Espresso Podcast, your morning shot of what's new in the world of real estate investing. I'm your host, Victor Menashe. Today's another AMA episode. That is, Ask Me Anything. I love to answer your questions, and if you have a question you think is going to be of broad interest, send it in. I'll answer it live on the air. Send your questions to victor@victorjm.com. That's victor@victorjm.com. Kerry writes, I'm trying to narrow down one or two focus markets for buy and hold single-family and small multifamily investments. I've come down to the following options and I'm curious about any feedback. Number 1, Huntsville, Alabama. Number 2, Memphis. Number 3, Charlotte. Number 4, Omaha. Number 5, Columbus. And number 6, Atlanta. I like all of these markets from a population job growth perspective and affordability as a new investor. I'm curious about any major positives and negatives that you see about these markets that I might be missing, whether it's high crime, new employers, high poverty, etc. Well, Kerry, this is a great question. I'm a believer in the laws of supply and demand, but it's more than just demand that matters. I'm talking about demand and ability to pay. The current job market turmoil puts a big question mark around ability to pay, and for now, millions of people are collecting unemployment benefits. It's unclear how long those benefits will be in place. At some point, the weakness in the job market will cascade into the financial markets, which may precipitate a shortage of lending. The last time we saw this was 2008. The cause was different, but the effect is likely to be the same. There are several considerations you want to examine, and top of that list is the partnership in the team. That's more important than the city, more important than any specific deal. Number 2, of course, the city, it's got to be attracting jobs, it's got to be attracting population growth. Number 3, you want to look at the micro market. Real estate is always hyperlocal, and some neighborhoods maintain value while others don't. Number 4, the asset class, and number 5, the deal structure. How much debt is on the property? Are you just one investor or do you have multiple investors? All of these things matter. Now, personally, out of your list of cities, I like Huntsville because it has a strong job story, with the auto sector having selected Huntsville for manufacturing. There's a history of technical expertise in both radio and military R&D centers. The drawback is that the rent per square foot in the market is low, averaging at about $1.10 per square foot per month. While there's a shortage of rental housing, there doesn't seem to be much upward pressure on rental rates, which is keeping new supply from entering into the market. That's why you have a combination of low vacancy and not much new product coming into the market. Number 2, you mentioned Memphis. I personally would stay away from Memphis. It's a tough market and you need an expert property management team to make money in Memphis. I know several investors who own property in Memphis and it's got more risk than I'm personally comfortable with. Number 3, Charlotte, North Carolina. Definitely a growing city. It's attracted several financial institutions. It's emerging as a banking center in the South. It's not super high priced and it's got good overall fundamentals. Hard to say what the impact of the current economic downturn will be on Charlotte. I simply haven't researched it. Charlotte is definitely worth a closer look. Number 4, Omaha. I'm sorry, I don't have an opinion on Omaha. I simply haven't researched that market. Number 5, Columbus, Ohio. It's likely to suffer a little bit from its higher than average exposure to retail in the current economic conditions. On the flip side, it's also a financial and insurance center in the middle part of the country. Overall, Columbus has been one of the fastest growing cities for a number of years. Definitely worth a closer look, but you've got to temper that with the current market conditions. At number 6, Atlanta, also a growing city, but like any city, it's got a lot of areas, some that I would not consider investing in at all, and others that are worth taking a closer look at. Before choosing a city, I would focus on finding the team to work with. Having the right people on your team is far more important than choosing the city. I would also be patient about investing right now. There will be opportunities to buy properties at a deep discount to the market, and this is going to take some time. We currently have a moratorium on foreclosures. That'll eventually be lifted. Much like the period following the 2008 recession, the opportunities took years to materialize. The best years for deals were 2010 and 2011. It took a while for these deals to show up, and I believe that's going to be the case this time around too. Given the choice between investing in single-family homes or small multifamily, there is a trade-off. These products attract different tenants. The small multifamily buildings tend to rent at a discount to the market averages. They attract a lower income tenant, whereas single-family homes tend to rent for a bit more. In my experience, single-family homes offer a more stable investment. But the problem is, of course, that they're difficult to manage. You end up requiring a strong management team in both cases. Income stability is key to making any investment today. So if your tenant loses their income and there's a moratorium on evictions, you can go from 100% occupancy to 100% economic vacancy in a heartbeat. But if you own a portfolio of single-family homes in the same neighborhood, then you can effectively manage them much like you would a multifamily complex. I would make sure that your purchase is not over-leveraged in today's environment. Once economic stability returns, it could be an opportunity to refinance and pull out some equity. I want to thank you, Kerry, for a great question. For the listeners at home, as you think about that, have an awesome rest of your day. Go make some great things happen. We'll talk to you again tomorrow.